The DGRO ETF has a very solid starting dividend yield of around 2.39%, which means for an initial $10,000 investment into this high-quality dividend growth ETF, a dividend investor would earn around $237 per year in dividends. But for the long-term investors that have time on their side and are willing to reinvest the dividends along the way, by the time retirement comes, they could be sitting very, very nice. Now in this video, we're going to do a deep dive into the DGRO ETF and expose why I think it might be one of the best dividend growth ETFs an investor can choose from. But also, we're going to be going over the exact math of what dividend growth investors can expect to have long term if they were to invest just $20 per day into this dividend growth beast. Now stick around because we're going to go through all that and more. Right after you, please drop a like on this video and subscribe for more future content like this. So first off, heading over to the DGRO website from iShares by BlackRock. The DGRO product brief says the following. DGRO invests in stocks of U.S. companies that have a history of growing dividends, a key historical driver of returns, and an attractive source of income for investors. The fund has also delivered competitive performance, kept costs low, and has been tax efficient for investors so far. Now, interestingly enough, they also have an infographic that says risk and returns of the 500 largest U.S. stocks by dividend policy. And this is from 79 all the way up until last year. And this is with a hypothetical value of $10,000 invested. So you can see that over that time frame, which is $10,000 invested, an investor could see $1.3 million in the S&P 500. Dividend cutters and eliminators could see $500,000, non-dividend payers $900,000, and dividend growers and initiators $2.3 million, which is what DGRO is all about. But now let's talk a little bit about how stocks even become a part of DGRO. Well, the criteria is the following. 5 years of uninterrupted annual dividend growth, which as a dividend growth investor, I absolutely love. Paid out dividends not exceeding 75% of earnings, which definitely plays into dividend safety, which is very, very important. Coming from someone that has had multiple different dividend stocks in the past actually cut or suspend the dividend, which is one of the worst things possible. And lastly, dividend yields not in top 10% of the investment universe. So the objective is to identify a universe of dividend growers, narrow in on companies likely to continue to grow the dividends, and reduce exposure to companies with unsustainably high dividend yields. So far for dividend growth investors, it sounds pretty much like a dream ETF so far. So now that we looked a little bit into the background of DGRO and how the ETF actually picks the stocks within it, let's take a look at DGRO's performance so far. So keep in mind this ETF has only been around since 2014, and just off of ETF price return alone, the ETF is up over 103%, and that is not including dividends. But interestingly enough, because of the holding breakdown, which we're going to go through here in a second, DGRO is only up 2.74% year to date, which still makes it at the higher end of the 52-week range at $51 and some change. But still, for long-term dividend growth investors like myself, it definitely raises the question if DGRO could possibly be a buying opportunity at these levels. But looking into the holding breakdown within this ETF, this is very important. The iShares Core Dividend Growth ETF breakdown is healthcare at 19.7%. Financials at 18.1%, technology at 16.4%, industrials at 11.3%, consumer defensive at 10.4%, energy at 7%, consumer cyclical at 6%, utilities at 6%, basic materials at 2%, communication at 1%, and a small amount of cash. Now the top holdings within this ETF as of right now are companies like Johnson & Johnson, JP Morgan, Microsoft, Exxon, Apple, abbvie, Chevron, Procter & Gamble, the Home Depot, Pfizer, and others. Altogether, 432 different stocks currently make up this ETF, making this ETF, in my opinion, pretty heavily diversified, which is important because you never know what's going to happen in the future. And if you do want to be a little bit more of a passive investor and not have to really stay up at night doing research and try to figure out if or if not one of the holdings within the ETF are going to really disrupt the portfolio, with over 400 different holdings in the portfolio, even if there's a few bad apples, the portfolio will still most likely do quite well. Now, another important aspect when investing into ETFs is, of course, the expense ratio. Now, an expense ratio is the cost of owning a mutual fund or ETF. The expense ratio is measured as a percent of your investment in the fund. And with DGRO having a 0.08% expense ratio, it is higher than something like SCHD and other comparable ETFs, but not by much at all. Now getting into the good part, DGRO's dividend. The current trailing 12-month dividend yield for DGRO is 2.39%. which definitely lags behind something like SCHD, which has a current trailing 12-month dividend yield of 3.54%. But the great part about DGRO is that investors are not only buying into DGRO for an immediate, big, juicy dividend. They're buying into this ETF because of the healthy dividend growth over time, and of course the massive ETF price return as well. But like we touched on a little bit earlier, looking a little bit deeper into the massive dividend growth that DGRO has offered so far. Now, dividend growth rate is the annualized percentage rate of growth that a particular stock or ETF's dividend undergoes compared to the previous 12 months before that. And looking at DGRO's dividends paid out on the max time frame, you can see that the last few quarterly paid dividends have been around 33 to 34 cents per share. Now what's crazy is that if you were to go back just around 9 or 10 years, you can see that the dividends were anywhere from 17 cents, 9 cents, which shows a very promising amount of dividend growth historically speaking. But now, like we touched on earlier and like you see at the title of the video, we're going to go through and see what an investor could expect by just buying around $20 per day into this monster dividend growth ETF known as DGRO. So with a $1,000 starting balance into DGRO, a 2.4 initial dividend yield, which is around what DGRO is offering, a 10% annual dividend amount increase, which is somewhere in the range that we can expect moving forward hopefully, the dividend frequency being quarterly and dividend reinvesting being turned on. Last but not least, $7,300 per year contributed into this portfolio because that's around $20 of DGRO purchased every single day. If an investor would do this for 30 years, let's see what we would end up with. So right off the bat, an investor buying $1,000 worth of DGRO would expect around $24 a year in dividends. Now by year number 2, in theory, the investor has been buying $20 per day into DGRO. At this point, the portfolio is worth around $8,300 and around $212 per year in dividends. Now, with the consistent annual contributions, the dividend growth, and of course, reinvesting all the dividends, you're going to see as the years go on that the portfolio is going to get very, very large. So by year number 5, we're up to $33,000 and just about $1,000 per year in dividends. By year number 10, almost $92,000 and $3,400 per year in dividends. Now by year number 15, $181,000 and $8,400 per year in dividends. Remember, this is just $20 added per day, buying consistent slivers of DGRO consistently. Now by year number 20, we're up to $328,000 and almost $20,000 per year in dividends. And I would say by year number 20 on, this is really where the snowball, the compounding effect takes place. Because you see, as the numbers get bigger, they start to compound off of the previous numbers. And then this thing starts to grow out of control. By year number 25, $587,000 of principal and over $44,000 per year in dividends. By year number 30, all the way at the bottom, this investor could in theory have over $1 million invested into DGRO with over $103,000 every single year in dividends. Now it just goes to show that a small amount of money invested into a high quality dividend growth ETF that does have some of the characteristics that most dividend investors are looking for can turn a relatively small amount of money into a boatload of money if the investor stays with it and sticks with the strategy long enough. But when it comes to the perfect long-term investing dividend growth ETF, I want to hear from you guys down below. If you could only hold on to one single dividend growth ETF from right now until the end of time, which would it be and why? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.